So this is a solution of our problem number 3. Okay, so we are going to first calculate in our A part calculation of total tax liability. What will be our tax liability? Whatever supplies we are making, okay, whatever outward supplies are there, that is our total tax liability. The first item is sold good at the rate 5% GST to Amit in Jodhpur. So now Amit's state is Jodhpur and Miss Seema, her state is Maharashtra. So this is case of a inter state. So we IGST will be charged. So value is 12 lakh and GST is 5%. So 12 lakh 5%, 60,000 will go in IGST. Now second one, sold good at the rate 12% GST to Abhay in Mumbai. Now Abhay is from Mumbai, Seema is from Maharashtra. So Mumbai belongs to Maharashtra. So intrastate transaction is there. So here CGST and SGST will be charged. So total amount of GST is 12%, which is divided into two, CGST and SGST in equal parts. So 6% to CGST and 6% to SGST. So we have 11 lakh, 12% is 6% is 66,000. So 66 in CGST and 66 in SGST. Next we have provide service at the rate 18% GST to Pooja in Delhi. So we have the value 70,000. Okay, so as CG 70,000. So Pooja is from Delhi, from the Delhi state, and Mrs. Seema is from Maharashtra. So again there is a intrastate transaction. So entire GST will go to the IGST. Okay, so it will be integrated GST. So 70,000 into 80%, the amount will be 12,600 in IGST. Then we provide service at the rate 18% GST to Sweetie in Nasik. Okay, Nasik is in Maharashtra. So this is an intra-state transaction. So GST will be divided into SGST and CGST. So GST amount is 80%. So we'll take 9% of 1,50,000. So 13,500 in CGST and 13,500 in SGST. So both, if you count this is a 18%, that is 27,000 of 1,50,000. Okay, now you have all gross tax liability for the month of January 2022. Okay, in A part, whatever calculation we have done, in that CGST part is 79,500. This is our tax liability. Okay, then SGST we have 79,500 and in IGST we have 72,600. Okay, so this is our calculation of total tax liability. Okay, so this is a generally gross tax liability we are having for the outward supply. Then in the part B, we will calculate input tax credit. Okay, whatever we have purchases, in that whatever input tax credit we have, that we are going to calculate. So we will make the column for particular value, CGST, SGST and IGST. Now we have a balance, okay, brought forward ITC. Okay, so we have a brought forward input credit tax that is given in the problem sum. Okay, so we have in CGST 15,000, SGST 15,000 and in IGST 17,000. Okay, then we have a two item or two transaction in our problem sum which have a input credit tax, that is provide service at the rate 18% GST to Pooja in Delhi. So value is 70,000. So now Pooja belongs to Delhi, Seema belongs to Maharashtra. So inter state charges will be there. So IGST will be applied in this case, and 70,000 80% will comes to 12,600, which will go in IGST. Then we have award service inward supply at the rate 5% GST from Surat. Okay, this is also the case of interstate. So 3 lakhs we have to take 5% and it will go in the IGST 15,000. Now if you take the total, now see we have an opening balance. So opening balance is 15,000. So we are writing total 15,000 in CGST, SGST 15,000 and IGST. But when we are going to calculate our net tax liability, okay, we are not going to again take this column by 15,000 in the opening balance. We will write less opening balance, but again we are not going to write this in the whatever output in the B. So 15,000 opening balance. So this total input will be nil. 15,000 in the opening balance. So 15,000 will be nil, and here we have 44,600. We will minus this 17,000. So we'll get the amount, whatever amount we'll get, that we will write in our solution, that is our part C. So let's see that. See, here the calculation of net tax liability which we are going to pay. So again we will do particulars, CGST, SGST and IGST. So tax liability in A, what we got is answer 79,500, SGST 79,500, IGST 72,600. Less opening balance of electron credit ledger. Okay, so whatever credit balance which is given in the problem sum, that is in the B part, 15,000, 15,000 and 17,000. Less input credit available C. So now see, input credit available, we have just taken that 15,000 amount which is their opening balance. So again we are not going to write it. Same with SGST, again this is opening balance, so we are not going to mention this here. Some students do this mistake of writing this again, so your answer will not be correct. Okay, so they take minus 30,000, which is wrong. Okay, so you just don't have to put here anything in the C, because opening balance only you have put it in your input credit balance, so don't write this. Then in the IGST you have opening balance of 17,000, and in this list, so in C we have a 44,600, but we'll deduct this opening balance, that is 17,000. So correct amount which is there is 27,600. So whatever left over after 44,600 minus 17,000, we are going to write it there. Okay, directly please don't copy paste this whatever you have input credit available, because it is from the opening balance itself which we are writing over there. Okay, so this mistake many of them are doing and they get the answer wrong. So this will be your correct answer. So here the amount in IGST will be 27,600. So net tax liability excess credit available A, B and C, it is 64,500. Then we have 79,500 minus 15,000, 64,500. Then 72,600 minus 70,000 minus 17,600, you have 28,000. Okay, so this is the way you solve your problem sum. So this is our calculation of net liability. Here we just have a liability to pay, we don't have any excess credit available, so no need of any adjustments. That's why we are not doing the adjustment column in this problem sum. So this is our solution from problem number 3. Now in the next now we'll do the problem number 4. We'll solve the next problem sum. Please prefer subscribing and click on notification bell icon for the next part. Thank you.